this is the Tucker Profit Group, and so we're here. We're talking about profit. We're talking about we operate out of really two books that we've been focused on. One is called The Psychology of Money by Morgan Housel, and the other is Profit First. It's this book. This is the one we're going to be. Let's see. Oh well, that's not cooperating. Anyhow, Profit First is the book that we're going to be talking through today. And really, our whole wow, there you go. You got good camera. Thanks, Nicole. And really, we're just about it's about getting our mindset right in terms of being prepared and how to handle profit, how to handle money, and then we talk about we're going to get into some specifics, some mechanics about how to ensure that we have profitable businesses and really profitable and wealthy lives. So today is the first day that we moved into. This is the first day, right? Yeah. We moved into Profit First. And Profit First is the book that it's got some real specific things in terms of setting us up to have profitable businesses. And we're taking it one week at a time. And it's a slow roll. We want to make sure we set the foundation. And we're going to start getting into some real meat here, real soon in terms of some practicals and things to do. In fact, we'll be talking about that today. So today we're going to talk about and I'm going to share my screen just because I do have a little presentation, if you will. Let's see, find that. Bam. All right. And okay, hold on. There we go. So again, this is the Tucker Profit Group. Welcome everybody. So today's agenda, we always start off with tell me something good. Anything that's happened over recently, last week or so, with respect to profitability of your business, or just reflecting on things maybe we talked about in our prior meetings. But we want to give an opportunity to do that, and then we'll talk. I'm going to do a recap of some of the concepts, some of the things that we've touched on since we started. So this is for you guys who first time coming in. You'll be able to kind of catch up and with that. We're going to talk through chapter 1, which is a Profit First, and then I say commitments. We'll talk about that. Assignments for our next time together, and so we'll go there. So, and you see in this picture right here, you see how I got this, this large mass of earth in sort of a mountain in front of us, and wealth is at the top. And sometimes it can seem that way, like somebody's trying to get in. Like wealth is, this almost unattainable thing that's up on a steep cliff somewhere, but it's really not. And with the right mindset and some practicals, we can get there. So anyhow, who's got something? Something good? Anything happened over the last week or so? Anybody want to share? If you guys, some of the new folks that are coming in, for some reason, when I'm running my slides, I can't see my cursor. So it's hard for me to, I also can't see if somebody has their hand up. So you might have to just come off mute and shout at me. Let's see. Well, we'll get into this, more later, but I had so I'll just share something that struck me over this last week was that, and I'm not going to get into the details. I've been sort of implementing the strategies, whatever, the profit first strategies. And so one of the things that struck me was that, and I work with my accountant as well, so that I have a certain amount that I transfer into my personal account on a regular basis. And in one of my, and I won't get into it, one of the accounts that I have set up as a result of Profit First is something called owner's comp, which ultimately would be of the money that, the profits that are generated in the business, how much of that I'm going to recognize as compensation to me as the owner, right? That's sort of my salary or pay, if you will. And so I have a certain amount that I have allocated. And what I realized is that when I made the last payroll, whatever, I still had money in my owner's comp account. And so my initial response was, hey, I'm just going to go ahead and take everything into my, but I said no, because I said I'm gonna just take the amount that I said I was going to, and so and that's what I live off, right? That's what covers my bills for my house and different things. So anyhow, it was just a recognition that I'm building, and I actually have more in my what I call my owner's comp account. We'll talk about the details of that. Than what I actually needed right now to cover my personal expenses. And then I just had a closing yesterday, and so, or 2 days ago, anyhow. So it's additional money coming in, and so I'm like, and that's one of the things we're going to talk about is that it's like having a systemic way of when you have money coming in, how do you allocate that money, and so that you cover all the bases, cover your living expenses and make sure you have enough to run the business and pay taxes and all that stuff. So anyhow, I literally just was reflecting on all of this over the last couple of days, just based on my personal experience there. So. All right, so I'm gonna just take some time, kind of a recap, and just to catch you guys up, what we did was in the other book that we were reading, which is The Psychology of Money, we actually covered chapters 2 and 3 and 10 and 11. So we did 2 and 3 the first, I think the second week, and then we did 10 and 11 the third week. This is our fourth week actually getting together. And today we just moved into the Profit First book. We're going to cover chapter 1. But from our previous times together, these were some of the things that I kind of noted. Successful money management is more about how you behave and less about what you know. And that's an interesting thing, because we actually read some stories, as you read in the book, there were some examples of people who are highly educated, very knowledgeable, had a certain level of expertise in finance and da-di-da, this and that. But because of the way that they behaved, they wound up broke. And so it was very, it was very telling, very impactful. The other thing was, wealth is the accumulated leftovers after you spend what you take in. So as we think about wealth, it's the accumulated leftovers after what you spend, what you take in. And the rate of savings drives, that's my little, my sports card there, if you can see that little symbol. Rate of savings drives profit, which leads to wealth. The rate of savings. And one of the things we learned was that it's not so much about your income or the rate of return on your investments. It's really about your rate of savings. And the last thing was to increase profit, increase humility. And so, Nicole, what are your thoughts? Can you, for the people who haven't been around, what is that last statement? What does that statement mean?
Say the statement again.
To increase profit, increase humility. You remember that?
Yeah, it's I don't know if I really know how to explain the way I'm thinking it. But basically not being concerned with the outside world and having things, and just kind of become more humble with what you have, and then not let your lifestyle increase as your profit increases, basically.
Right, exactly. And we talked about ego and how, you got to keep your
wanting to have everything because other people have it, or just to show off that you have it.
Yeah, absolutely.
Trying to show that you're wealthy.
Yep. And and I referenced at one point, and there's another book, whatever, the Millionaire Next Door, which is another popular book that's been around for a while. But it talks about, in that book, it talks about how most of the millionaires in this country are people that, you never see them coming. You won't look at them and say, oh, there's a millionaire. Most of the time we think of, millionaires as, flashy dressers with the big house, the fancy car, the this, the that, the expensive watches and jewelry. But that's not the case. Most of the millionaires that's why they call them millionaire next door, because, they walking around, they look and talk or whatever, just like you, except they got they got accounts or assets that, that fund their lifestyle, and that's where it talks about with the humility, So anyhow, those are some of the key things. Was there anything else? I cannot see. My screen is limited on who I can see. So I can only see Deanna. I see a picture of Terrell and somebody else trying to connect the audio with a J on it, and Nicole. So I don't know who else is on here who's been with us over the last couple of weeks, if they want to share anything, or if you want to share something, Nicole, about over the last, anything that stood out to you over the last couple of weeks.
No.
Okay.
Really.
All right. So those are some key concepts, and somebody's trying to get in. Unfortunately, I can't control my cursor, so I'm not able to let them.
I think they keep coming in and out because they've already been connected before.
Oh, okay. So today, chapter 1, the money-eating monster. And I've got to hold on. I guess you guys, you can't really see my. I'm assuming you can't see my. I gotta kill that thing. I love this. I love my picture. this purple monster over here in this picture is kind of like, in this chapter, it talks about how your business can be a money-eating monster, right? Where it's, where it's like just continuously consuming, and it's like, it's always wants more and more and more. And so anyhow, I thought that picture was appropriate. These are some concepts from this chapter that a couple of things that I this is some stuff that for me that stood out. Business spending is very much like personal spending. Your business has an insatiable appetite for consumption. You know how, as personally, right? There's endless ways to spend our money. Well, we can be the same way in our business. And we know that by, you're always getting people with this or that, the new shiny thing, this system, to that system that's gonna, you gotta have this. How have you ever survived in business without it? And, for only $49.99 a month, you can have, blah, 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 whatever. So there's always a way to spend business. Or there's the new, well, I talked to, Johnny in the hallway and he's doing this, that, and the other thing. Man, I'm gonna start doing this, that, and the other thing. And then next week we talked to Sally, and Sally's doing, bibbity bop and boppity boom. And so now I'm gonna do bibbity bop and boppity boom. Right? And so it's always something. There's a whole lot of ways to, spend on lead generation and marketing, and I mean, connecting with our client base. And so it's really endless ways to do it. But we have to be mindful of that. And this last thing, to build a profitable business, you must not only learn to collect money, you must also learn how to keep it, how to control it, and how to grow it. And I thought that's because, a lot of times we talk a lot. I mean, this honestly, we talk a lot about, production. We talk a lot about how to grow the business, how to get the sale, right? How to get that next client, how to convert. But what we're focused on here is these last things. How do we keep it? And it's so funny. In a prior life, I was a finance director at the Coca-Cola company, and McDonald's was my customer. And I used to have people say all the time, "Oh, McDonald's never go out of business." I'm like, oh, yes, they do. You just don't know it, because you're not going to see a McDonald's boarded up and whatever. But trust me, there are McDonald's operators who go bust because they don't operate and they have a business. I'm like, man, they always got cars coming through the store. They got money coming in, but they didn't learn these last parts. They learned how to control it, how to keep it, how to grow it. And so, that's what the same thing with our businesses. We could have sales. That's why you never compare your business and what's going on with you, what you see on the outside with somebody else, because somebody might have, they might have great sales. They might be selling a lot of houses, but you don't know what their expenses are. And so they might not be very profitable, right? And so just be mindful of that, is that, revenue and sales don't equate to profit unless we're actively managing that. So a couple of things from the book that I want to touch on. And I just wrote some reminders here. Hey, without an understanding of profit, your business is a house of cards. That's on page 17 of chapter 1. I'm going to look at that. And so actually, before I actually get there, I want to read this. This is one of the guy, shares a story. Morgan Housel actually shares a story about how not Morgan Housel, Mike McAllowitz, when building a business and had built and sold, a couple of businesses and made a lot of money, and then how he lost it all, right? And so it shares here on page 17, I'm going to read this. It says, I knew how to grow a business from nothing, working with whatever resources I had, but as revenue increased, so did my spending. I discovered that this was the way I ran both my personal life and my business. I took pride in making magic happen with pennies in my pocket. But as soon as I got some real cash, I made sure I had a very good reason to spend it. It was a check-to-check lifestyle, but sustainable as long as sales were sustained and did not dip. It says, while my companies grew explosively, I still operated them on a check-to-check basis. And I had no idea that this was a problem. The point was to grow, right? Increase sales and the profit will take care of itself, right? Wrong. Money problems occur when one of two things happen. Sales slow down. The problem here is obvious when you operate check to check and sales slow down. When your one big client goes out of business or that big deal that you were banking on falls through, you won't have enough to cover expenses. Or sales speed up. The problem here is not obvious, but it is insidious. As your income climbs, expenses quickly follow. Big deposits feel great, but they are irregular. Consistent income and cash flow is hard to sustain. A great quarter can trick you into believing your business is on a permanent upswing, and you start spending like this is the new normal. But drought periods come quickly and unexpectedly, causing a major gap in cash flow. And then a little further down, this is what he says. Without an understanding of profitability, every business, no matter how big, no matter how successful, is a house of cards. I made a lot of money with my first two businesses, but not because I ran a tight fiscal ship. I was lucky enough to keep the plates spinning fast enough and a company growing big enough that someone else was willing to buy it and fix the financial problems. So that's that first point, is that we have to have an understanding of profit and what that means for our business. It can lead to some real problems, and we can get into a situation where we're just spinning our wheels, chasing after the next deal, chasing after the next sale, taking extraordinary steps to solve problems. Hey, I got a shortfall here, and what do I do? And I'm, running crazy to try to put this fire out or put that fire out. So that's some of the things that we're seeing here in this chapter. Here's another thing that was in this first chapter that I thought was great. It says, profit is not an event. Profit is not something that happens at year end or at the end of your 5-year plan or someday. Profit isn't even something that waits until tomorrow. Profit must happen now and always. Profit must be baked into your business every day, every transaction, every moment. Profit is not an event. Profit is a habit. I love that. Profit is a habit. That's a great. Let me just get some thoughts. What are your thoughts? When you hear that, like, how does that feel to you? Versus how you thought about profit. Anybody? Come on, this is a participatory activity, and guys, you're gonna have to just speak up because I'm not able to be able to remove you or to unmute you.
I just think it's going to take repetition. You might start and stop and start again. You have to kind of keep going. It's going to take practice.
Yeah, I think, yeah. And there's definitely that aspect of, there's definitely that aspect of making tweaks and improving and changing over time, for sure. What I think is referring to is what it's referring to is that, traditionally, the way we're taught, the way we think about profit is that, hey, we have sales come in, and then we have expenses, right? If you think about like a profit and loss statement or whatever, starts with sales, then you have all your expenses, and then at the bottom, if you're lucky, you have profit.
You need to figure out the profit first so you know where it's coming from.
And when it says profit is a habit, it's like, hey, it's like, I'm going to set myself up so that I know that if I have, whenever I have a transaction, whenever I have a sale, I know there's profit. My system is going to be set up such that there's going to be a profit that's baked into that. And it's a habit because it's just, I don't have profit sometimes. I have profit all the time. It's just it's just the way things work. It's systemic, and it's not a sometimes thing. Like when I go see my accountant, anyhow, it's that statement about profit being a habit that's a powerful, powerful statement. It really is, because it has everything to do with our focus and being intentional about ensuring that we have profitable businesses. And like I said, it's every day, every transaction, every moment. And so anyhow, that may become more maybe I'm a little bit ahead of myself. That'll become more obvious, I think, as we move along. The other thing I was going to say is on page 25, there was a statement here about sustained profitability depends on efficiency. And that has to do with, hey, having an efficient, like, it's not just about driving sales, but it's about the effort that it takes for us to drive sales, right? It's about being efficient, being effective, being systemic in how we drive sales. Because, it's, again, this could come down to, hey, I'm spending all this money on Facebook ads, right? And understanding, hey, how effective are those Facebook ads for us, right? That's why, like, during business planning and different things, we talk about, I don't know why I did that. We talk about looking at, where did your sales come from, right? What was the source of your sales? And then and it's kind of like doubling down and focusing on the areas where your sales come from, because we can be chasing a lot of different things, because everything is about a system, right? If you're going to do open houses, right, there's a system around open houses. If you're going to be doing circle prospecting and door knocking, there's a system around that, right? If you're farming, there's a system around farming, right? And there's multiple things involved in that. And, you know, there's going to be some costs in every system. And so you want to be able to have your system be as efficient as possible so that, you know, it's again, like when we talk about Facebook ads, it's like, hey, if I'm spending money on Facebook ads, I want to pay attention to how many leads am I getting, and then do I have the system set up to effectively engage with the leads and convert those leads into transactions, right? And that's what we're talking about. It's like, in order to have sustained profitability, it depends on efficiency. Because if we're not efficient, the more efficient we are, the more predictable we're going to be. And the more predictable our businesses are, then the more, the higher the probability of us having sustained profitability over time. So that was another concept that came up that, again, you know, where we are right now, a lot of this is setup, man. A lot of this is just, you know, there's a lot of concepts, but there's some real things that we have to be mindful of, right? I mean, like if like that statement about profit is a habit, if we're not in the habit of having a profit generated, and again, we go back to the statement, you know, what I read before about, you know, wealth is the accumulated, it's like the accumulated profits, the accumulated, you know, money that we have after we spend, right? So it is like we get in the habit, if it's a habit for us to spend everything that comes in, that's a habit. Right? It could be a habit for us to spend everything that comes in everything that touches our hands, or everything that comes into our bank account. It can be a habit for us to spend it all. And if we're spending it all, then there's no profit. And if there's no profit, then we're not going to build wealth.
Hey, Joe, so, Shantae is in the chat, and she said, when I hear profit, I think of surplus.
Absolutely. And exactly. And surplus is an intentional surplus, right? That's where the habit comes in. Surplus could be you know, circumstantial or you know, not predictable. But when you make it intentional and predictable, that's where it becomes a habit, and that surplus. So that's what you want. You want a habitual surplus. Habitual surplus. That's a great. I love that. And that's good stuff. I'm trying to see if there's. So is there anything, okay. So this was another thing that we talked about. I was going to say in the book, one of the things it talks about is traditional accounting. It makes a statement, traditional accounting is killing your business. Well, you know, in traditional accounting, again, there's the fundamental principle or statement is, you know, I talk about the P&L statement, right? The profit and loss statement, which, and the formula is sales minus expenses equals profit. It is sort of sequential. Sales minus expenses equals profit. And then they have something called, you know, your traditional accounting, or GAAP accounting is how it's referred to. And the guy, he shares in the book about how he sat down with his accountant, and they were going through their numbers, whatever, I think at the end of the year or whatever, and the accountant is on his computer clicking some things, whatever, and then he spits out a report. He says, well, the good news is, he said, you made you had a profit of, I don't forget what it was, $15,000 or $50,000, something like that. And so the guy's kind of puffing his chest out and like, you're darn right I had a profit. It's like, that's how it's supposed to be. And then all of a sudden he thought about it. He's like, well, wait a minute. He's like, if I had a profit, he's like, well, where's the money? Because he knew in his account, he didn't have any money in his accounts, in his bank account. But his accountant is sitting there, going through the accounting, and he's going, oh yeah, you had a profit. So he asked the guy, he's like, well, where's the money? He said, I can't tell you. He said, you probably spent it. He said, but that really has nothing to do with what we're talking about here. And so it hit the guy like, here it is, I'm talking to my accountant and he's telling me I made a profit, but yet I don't have any money in my account. And so that was one of the aha moments for him, was that, how his accountant was talking about profit. In his mind, what he thought the profit should be were two different things. And so he makes a statement in here. He says, our definition of profit is simple: cash in the bank, cold, hard cash. And it says, at the end of the day, the start of a new day, and every second in between, cash is all that counts. It is the lifeblood of your business. Do you have it or not? If you don't, you're in trouble. And if you do, you're sustained. It is a simple thing, but that's such a profound statement, because, it's true, right? It is true. If we don't have cash, we're done. Now, we're in a business, we're in a business where, you can build a business from darn near nothing. You can get out there and hustle and generate some sales and really start building up your cash, right? Cash comes in handy though at some point. It's just like we had a session with Bob Kalinsky, and he was talking about running your business like a business. Well, one of the key principles, the 10 steps of having a real what he calls a real business, is having your business be capitalized. And what that means is that you have money to fund things in advance of the sales coming in. What I just talked about was, hey, you can do that. You can get out there and hustle and start generating sales with not a lot of money. And at the same time, to have a real business, a sustainable business that you can grow and expand over time, you're gonna have to have capital. You're gonna have to have money to be able to, maybe hire, for example, an administrative assistant, an executive assistant, right? Where you're spending money, you're not going to just say, well, that person works, 30 hours or 40 hours or 20 hours a week. They're going to expect to get paid at the end of the week, right? And not like, well, hey, I didn't make a sale, so I can't pay you. That's not going to last long. So you may have to pay them in advance of the sales. So that's why he's talking about, capitalizing your business. You may you may need to buy signage. Maybe you need to invest in signage and get things, whatever. There's different things that you might need to invest in before the sales start coming in. That's what the capitalization is. But anyhow, I'm kind of getting off track with that. Any thoughts? And again, I can't see. I don't know if anybody else is on. Any thoughts, Nicole? I know you're from this chapter. Anything stood out to you?
I didn't finish the whole chapter, to be honest.
Okay.
But no, not particularly. I feel like I took more notes when I didn't have the book. Because I wrote everything down because I didn't have it. Now I'm reading it and it's like I need to do more highlighting. I need to keep a sticky note inside of it so I could take notes and stuff. So yeah, no, not this time.
Yeah. I mean, and that's the thing. I mean, again, a lot of the things that we've been talking about up until this point, and even through today, is really, I mean, is conceptual and it's important, huh?
Yeah, start doing it the right way.
Yeah, it's important.
Don't keep wait. What I do, my aha is don't keep waiting until you making enough money to profit. You kind of have to set yourself up to learn how to do that to start.
Yeah, and
so that it can become a habit.
Yeah, and that's what we're going to get into. That's exactly as we get into this next thing. So profit equals cash in the bank. That's the last thing I'm going to say. All right. So when we're thinking about profit, is cash in the bank. All right. So so let's just talk about what's coming up. All right. We're going to talk about what's coming up. So we're actually going to start moving into some real, practicals. Okay. We're still setting up some core principles. The next time we meet, these are some of the things that we're going to be covering, right? Core principles of profit first. Using small plates. And that's about, we'll get into it. It's about starting where you are. It's not about going to bright. It's about getting started. And even like with respect to profit, look, you might want to have a business that is, generating 15% profit, 20% profit, whatever that might look like for you, right? But we're not going to start there. We're going to say in the principles of the profit first method is to start small. So it might be, you might start with 1% or 2%. Well, what we're going to do is it's about building habits. And a lot of this, we're going to start getting into some practicals, and it's about starting small, and we're going to build over time. And this is the principle. Serve sequentially. We'll talk about that. It's about doing the right things in the right order so that we're building a foundation, and we're not going to be that house of cards. It's going to be a solid structure and a solid process and methodologies, so that because what we want to do is we want to build profit that is sustainable over time. We don't want to be up and down. I got profit, I don't have profit. I mean, it's going to be sustainable. We're going to talk about removing the temptation, and that's a core thing. And there's some practicals around that, removing the temptation, so that we we don't go in a direction that's opposed to the direction that we want to go in. so that we can achieve the goals that we want to achieve. And the last thing is enforce a rhythm. And again, right, this is about habit. When you enforce a rhythm and you have a systemic way of doing things, and you'll see this, we're going to get into all, but these are some of the things that we're going to be talking about when we get into when we meet next time. And then we're going to talk about the new accounting. Remember I talked about the traditional accounting is sales minus expenses equal profit. Well, the new accounting is sales minus profit equals expenses. So basically, to summarize, what that means is that next time we have a sale, we're going to take profit off the top. Instead of taking the expenses off the top and then profit at the end, when we get a sale, we take profit off the top, and then we have our expenses, that we operate, whatever is left, that's what we operate on. This is a powerful concept. It's a powerful concept. It's like, in personal finance, you may have heard of the concept of paying yourself first. This is sort of equivalent to paying yourself first. But I'm telling you, this is a powerful concept. The concept of we're going to take profit off the top and then cover everything else, as opposed to the other way around. This is how you ensure that you have profit in your business. And so this is going to be fun. This is, again, we're going to start, you start where you are. It's going to be, small plates, and it is a methodology for how you build it over time. But this is, we're going to start getting into some real meat here. This is going to be fun. And I always,
since the build your business run your business like a business class, it just seems like everything since then has been figuring out where you are, being okay with where you are, and moving from there.
Oh, absolutely. Yep. And look, there's no magic number in terms of what your profit should be or how much your profit should be, because it ultimately is all tied to your lifestyle, right? Life by design, right? That's what we talk about, is life by design. So whatever your, inspiration is for your life, this, how we operate our business and the profit from our business is going to contribute to our life by design. So, if you like Gucci and you need Gucci life, you need Gucci level profits, then okay, that's fine, right? If you have, another level of, I gotta put that down. If you have another level of what your expectation is and what you need for you to be satisfied in your life, then that's going to be what it is for you. But whatever it is, this is going to show us how to generate the profit to be able to have our life by design. So I'm excited about that. I always say, and I apologize, guys, I'm talking a lot. I can't see you guys. And I hate the fact that, I really like for us to be in person, where I can feel the energy in the room and we can, get into it. And, we usually have a lot more dialogue and, exchange, and we will definitely do that, particularly as going forward, as we're getting into the implementation. There's going to be plenty of opportunity for us to talk through our experiences with, the processes and the strategies and how's it going and questions and all of that. So I'm looking forward to, the upcoming weeks and months. So this is the last thing. This is another thing that we're gonna be covering next time. And these are actually I'm going to share with you guys what we need to be reading for the next time that we get together. But all of this stuff that I'm talking about is covered in the is covered in the book. So we'll just have a chance to go through that. But they're going to talk about the 5 foundational accounts. So these are 5 accounts that we need to set up, you know, for our business. Okay. I don't know where we are with that. I don't know if you know, first of all, we need to have a business account. We need to have a business account. It needs to be separate from your personal account. You need to have a business banking account. But really, we're going to talk about how you need to have more than just one account, right? And there's several. And there's actually even more than this, but we're going to talk about the 5 foundational accounts: the income account, the profit account, the owner's comp account, the tax account, and the OPEX account, right? And so, again, there's some real practicals that we're going to start getting into, and to set us up to be successful so that we can have the profitable businesses that we desire. And with that, our next meeting, and for those who've been here before, you know, the
same
bat
channel, same bat time. So same bat. I'm not a Batman person. Same bat channel, same bat time.
Except, all right, next week we will not be meeting next week. Okay.
Oh.
We're not going to be meeting next week. The staff is out on. They're going to be out for Easter and on Friday, and so we're not going to meet next week. We'll be back, and we're going to be in person if you can make it. If you can be with us in the training room from 1 to 2 on April 22nd will be the next time we get together. Then that would be great, because I think it just works a lot better if we're in person. And we're going to be in the book Profit First by Mike Michalowicz. Now, I will say this: you can purchase the book on Amazon or wherever you buy books. And you may not be able to see mine. I don't know why mine.
Because you have your background is blurred.
Oh, that's what it is.
Uh-huh.
Well, Nicole, if you can hold yours up. So you can buy that book. We also have a PDF version. If you want to get the free PDF version, just send a message to
anybody.
Anybody.
Me, you, Deanna.
Yeah. And don't send it to me. Send it to Deanna. And Julia can get you the free version. Okay, the PDF. And we're going to be reading. We're going to be in chapters 2 and 3 of Profit First the next time that we get together. All right. So, all right, guys. And again, I hate the fact that I wasn't able to be in the training room today.